Welcome to Let's Talk Investing, a co-production of the Globe and Mail and the Investor Education Fund. I'm Rob Carrick, personal finance columnist at the Globe and Mail. And with me is Camilla Sutton. Camilla is a currency strategist at the Bank of Nova Scotia. Today we're going to talk about how you can be your own currency analyst. Camilla, how long have you been watching the Canadian dollar?
Oh, for a long time, almost 10 years now.
Okay, what are the key factors that drive it? I'm talking about factors that people at home can watch and keep an eye on and say, oh, I see this is happening. That will be bullish or bearish for the dollar.
The biggest trends we see moving the Canadian dollar over time, oil, very big important one. The broader US dollar movement, so when the US dollar is weak, Canada tends to be strong. And generally the economy, when we tend to be in global periods of expansion, the Canadian dollar does well. Recessions, the Canadian dollar doesn't do very well at all.
Now in the past, what events have there been that have been absolute dollar killers, events that have just trounced our dollar?
Anything that throws some ambiguity into the market. So things like political turmoil. When we had the Quebec referendum, very negative for the Canadian dollar as the global market looked at Canada and couldn't really figure out where we were going. Anytime we have monetary policy that's working against the Canadian dollar, so that tends to mean
interest rates falling.
That's right. Those types of things tend to work very negatively against the Canadian dollar.
Okay, now what events are really bullish for the Canadian dollar? You've mentioned, for example, if we get a spike higher in oil prices, that's going to be good for us. What other things generally, historically, have propelled our dollar higher?
It's like a spike higher in oil prices, great. In commodity prices, great. Anything that when we see interest rates in Canada moving higher and the economy very strong, very good for the Canadian dollar overall.
Now, what overall, a rising dollar, how do you rate that as in terms of its impact on investors and people from a personal finance point of view? Is it good or bad, a rising dollar?
Well, it depends where you're invested. If you're invested in Canada, it tends to be very good. If you've invested abroad and you have a diversified portfolio, it can really have negative implications for you. So you really need to know how much currency exposure you have that isn't Canadian-based.
Now, if you have exposure to global currency, say through a global equity fund, how vulnerable are you there, given that you've got the diversification of owning the currencies of a whole bunch of different countries, and some have to be rising and falling at the same time? Does it all cancel each other out?
It's a good point. I mean, it tends to be the US dollar drives an awful lot of things, and this year is a great example of that. US dollar is very weak, everybody else is strong. So if you're invested outside of the US, so in Europe, then you have a little bit of a hedge there. But all in all, we do see that currency hedging does help the portfolio.
Last question. What would be the number one vulnerability for the dollar as we look forward the next 12 to 24 months? What wild card out there could torpedo our dollar? Just take a guess.
There's quite a few, but I think one of the big ones is some major global intervention by central banks around the world to support the US dollar. We've seen an awful lot of weight against the US dollar, and any kind of global central bank coordination would really have a great implication for the Canadian dollar as well.
Okay, thanks, Camilla.
My pleasure.